Good morning. If I am audible, visible,
Good morning.
just type
If I
just
am
type in the
audible,
chat that
visible, good
I am
morning.
audible.
If I am audible.
Okay. Uh, how many of you would like to diversify your portfolio and trade into other asset classes? Please type me in the chat box. There's a chat below the YouTube. You can just type me, M-E, me in the chat box. Yeah, I can see a few chats. Thank you. How many of you would like to trade in international traded commodities? Please type me in the chat box because today's session is on commodities and predominantly it's international traded commodities that we'll be discussing. Yeah, thank you. My name is Ramesh Varakhedkar. I head Commodities and Currencies business at ICICI Securities Ltd. Firstly, I would like to thank each one of you for taking out time on Saturday morning, 11 o'clock, and joining this webinar on commodities. You could have done many other things, but you chose to learn about commodities and going forward trading commodities too. Can I also request you to type YES in case you have been trading in commodities? Just type YES in the chat so that I can understand how many of you have been trading in commodities. Okay. Importantly, this week, which is 22nd of November to 28th of November, is World Investors Week. And SEBI and exchanges have been doing a lot of awareness programs. And today's webinar is also a part of the same. We are doing for the awareness on commodities to all the customers or all the investors who have got added or who have joined this webinar today. We also at ICICI Securities believe that one should understand and then trade into any of these markets. Today, in next 1 hour, me and my colleagues, Jitendra is there from ICICI Securities and Somesh Vaidya from MCX will be joining shortly. We'll discuss about commodities. I will talk why to trade in commodities, how to trade in commodities, and what all commodities to be traded. So I'll just zip through the presentation first. What are commodity derivatives? As you all know, before that, to understand, commodities is a must for truly diversified portfolio. And you all know demand for commodities will never disappear. Every single commodity, right, takes time to be found. And then, let's say for gold, it has to be first found, mined, and then the jewelry and all other things happen. Our ancestors valued gold for its rarity, its diversity, and its ornamental appeal. You can't ignore an asset class like commodities, which has done well over a period of time. Maybe there are many myths like they are risky, volatile, and complex. But it's important to understand and then trade into commodities. Right? Moving ahead, let me just share what is a commodity derivative. So derivative, you have an underlying, like you have a stock and you have a stock derivative, you have a currency and you have a currency derivative. Similarly, you have an underlying commodity, which can be gold, crude, or any of the base metals. And then whatever is derived, the price is a commodity derivative. Okay. And in these derivatives, there are futures and options which are traded on exchange. And mainly they are used for trading, hedging, and arbitrage. Moving ahead, going to history of commodities, I'll just try to keep it crisp. In India, the commodities have been trading from 2002. Earlier, FMC was the regulator. 2015 September, SEBI took over from FMC, the commodities business. And after that, there have been a lot of developments which have happened. SEBI came out with the commodity options. They came out with ENWR, which is negotiable warehouse receipts. Then recently, last 1 year, indices have been launched. Similarly, they allow a lot of other participants to come and participate into commodities, which was not there earlier. Now, mutual funds have been participating in commodities. Eligible foreign entities have been participating, and alternate investment funds like CAT3 have been participating. After SEBI taking over from FMC, commodities, they also allowed other exchanges like NSE and BSE to offer commodities. Moving ahead, let's understand which are all the commodities which are traded internationally, which are the exchanges. If you don't look at NYMEX, is an exchange where predominantly it's energy products which are traded like crude oil, natural gas, and heating oil. Similarly, COMEX, it's gold, all precious metals like gold, silver, platinum, palladium is traded there. CBOT is predominantly agri-commodities. London Metal Exchange, all the major base metals are traded like copper, lead, nickel, zinc, aluminum. ICE again is for cotton, sugar, and you have Bursa Malaysia where CPO is traded. So these are the exchanges where these major commodities are traded. Moving on to India, there are 5 exchanges where commodities are traded. MCX being the market leader, almost 90+% market share, and it's been there from 2002 2003. Then you have NCDX, ICX, BSE, NSE, as I said, after SEBI taking over, these are the 2 exchanges which have got launched. So at ICICI Securities, we are predominantly on MCX, which has got the highest market share, and we trade all the commodities which are traded with good volumes and OI at MCX. Moving ahead, commodity contracts, if at all look at, these are all the different commodities which are traded. In base metals, you have aluminum, copper, lead, nickel, zinc. In bullion, as I mentioned, it's gold, silver. Energy is your crude oil, natural gas, and agri-commodities. All these commodities are divided into 2 parts. One is hard commodities and soft commodities. Hard commodities are all those commodities which are extracted from Mother Earth. And soft commodities are those which are grown, like your cotton, CPO, castor, so on and so forth. So this is how commodities are divided. That is hard commodities and soft commodities. And coming to why to invest or trade in commodities. 1, commodity derivatives. 1, commodity derivatives gives you leverage. One can trade into gold by just putting a margin of 10%, and they'll be able to take a leverage and trade in derivatives. And all these contracts which I've been mentioning are pretty liquid. So one can enter and exit with in fraction of seconds. So good liquidity is available. And commodities, as I said, are without commodities, the portfolio is not diversified. Commodities is a must to have a truly diversified portfolio. Commodities are also inflation against hedge, and when you trade on the exchanges, it's pretty transparent. So these are the advantages. These are the things why one should invest or trade in commodities. Moving ahead, many of customers have been trading in equity markets because equity markets have been there for long time. Commodities have just come in the recent past. But if at all you look at the difference between commodities and equity derivatives, right? Commodity derivatives, I believe, are easy to understand because they are all global and you'll be able to track. Whereas equity derivatives, there are so many scripts which are there, 5,000 plus scripts are there. So it's a little tough what to trade. But when it comes to commodity, there are select scripts, 10, 12 commodities which are pretty liquid, and one can look into those commodities and trade. In equity derivatives, obviously, when I'm talking about derivatives and futures, the contract value is between 5 lakh to 10 lakh, right? But when it comes to commodity, you have a wide range of value of commodities which you can trade. For example, you have a gold petal, right, which is a 1 gram gold. So today the value of 1 gram gold is approximately 4,700, 4,800. So one can give just 10-12% of margin and trade in 1 gram gold. Similarly, we have a large lot size of gold 1 kg, which is 47-48 lakhs today, and one can give a margin of 4.7-4.8 lakhs and trade in gold 1 kg also. So what I meant to highlight is the range is pretty wide. You can start trading from 500 rupees to 5 lakh rupees in commodities as a margin. Margins are pretty lower, 10, 12, 15% of margin, whereas in equity derivatives, the margins are a little higher. The most important aspect of commodities is commodities trade for a longer period. Monday to Friday, the markets open at 9 o'clock in the morning and trade till 11:30 or 11:55 in the late night. Now, November onwards, the timing has market will close at 11:55, whereas equity markets close at 3:30. So you have extra 8+ hours of trading that one can look and one can trade in commodities. Both commodities and equity markets are volatile. Commodities, you have long dated contract, but liquidity, yes, is there for current first month, second month. And these are all internationally traded commodities. So one can look as reference. I'm not saying that they should look at the international price and trade, but they can keep watching the international price as a reference and then trade into Indian markets. So moving ahead, I'll just quickly zip through what are all the different contracts that one can trade in commodities. You have 4 contracts in gold, which is gold 1 kg, gold mini, gold guinea, and gold petal. Okay, as I said, gold mini, gold guinea, gold petal are monthly contracts, whereas gold, there are 6 contracts which are traded in a year's time, right? I'll just come to the calendar and expiry. As I said, markets are from 9 o'clock morning to 11:55 in the night. All these gold contracts, I'm saying gold 1 kg and gold mini, the quotation is in 10 grams, whereas gold 1 kg, what is traded is 1 kg, and 100 grams is 10 times of that quoted price. So 1 rupee movement in gold 1 kg will give you a gain or loss of 100 rupees, whereas 1 rupee movement in gold mini will give you a gain or loss of 10 rupees. So in case somebody has got a lesser risk appetite, they can go and trade in gold guinea and gold petal. Gold guinea is predominantly traded in south, which is a 8 gram. They call it a sovereign. So here 1 rupee movement will give you a gain or loss of 1 rupee in gold guinea and gold petal. Let's understand how this contract expire. Very, very important, right? Equity markets expire. I'm talking about the monthly contract on last Thursday of the month. But when it comes to commodity, let's take any of those contracts which is expiring on the last working day of the month, right? 5 days before the last working day, you can just see this calendar. There are 5 dates in LO, 25, 26, 27, 28, and 31st, 29th and 30th, Saturday and Sunday being a holiday. All these contracts will move into staggered delivery 5 days before the expiry. So in this calendar, if at all you look at one, if expiry is on 31st, one can trade up to 24th. 25th onwards, it moves into staggered delivery period, and delivery has to be taken in case if somebody is a buyer, or has to be given in case is a seller. So at ICICI Securities, since we have predominantly retail investors, what we do is we do end of the settlement before it moves into staggered delivery. All the positions are squared off in the evening, so one can square off his own position or can roll over into the next month. I hope everybody is clear on how this staggered delivery works. You can just type yes in the chat box in case you have understood this concept of staggered delivery in commodities business. Yeah, Jitu Jevrani, I can see a yes. Sonal Mule, yes. Yeah, thank you. Moving ahead, the other contract is silver. In silver, you have 3 contracts, which is silver 30 kg, silver 5 kg, and silver 1 kg, which is silver micro. Okay, there are 5 contracts in a year which are traded for silver, and silver 30 kg contract expires on 5th day of the month, right? I said there are 5 contracts which are there, but whereas all other contracts expire on the last calendar day. So 3 contracts here, 1 rupee movement will give you 30 rupees gain or loss for silver. Large contract, which is a 30 kg contract. Silver mini, since it's a 5 kg contract, will give you a gain or loss of 5 rupees, whereas silver micro will give you a gain or loss of 1 rupee. Moving ahead, yesterday we saw a huge volatility in crude oil prices, right? It was more than it was down by more than 10%. So in energy, we have 2 products, which is crude oil and natural gas. Both are monthly contracts, expire as per the NYMEX expiry. Okay, and here the trading time is same, 9 o'clock to 11:55 late night. Crude oil lot size is 100 barrels, so 1 rupee movement will give you a gain or loss of 1 rupee. When it comes to natural gas, the lot size is 1250 MMBTU. So each British thermal unit, a gain or loss of 10 paise will give you 1 rupee, will give you 1250 rupees. So that's the other contract, and crude and natural gas have been the darling of the market and have good volume and liquidity for any of the traders. Moving ahead, 5 base metal contracts, aluminum, copper, lead, nickel, and zinc. These are all monthly contracts, expire last calendar day of the month. Timing is 9 o'clock to 11:55. And price quotation for all these contracts is 1 kg. But the lot size is different. Aluminum, lead, and zinc, the lot size is 5 metric tons. So 1 rupee movement will give you a gain or loss of 5,000 rupees. But when it comes to copper, lot sizes of 2.5 metric tons, which is 2,500 kg, and a movement of 1 rupee. Similarly, movement of 1 rupee will give you 2,500 rupees. Similarly, nickel contract is 1,500 kg per lot. So these are the 5 base metal contracts which expire end of the month, monthly contracts on MCX. Then you have agri products. One thing I wanted to highlight when I'm talking about agri products is these are internationally traded agri commodities. I talked about cotton, where the largest exchange is ICE, where it's traded. And similarly for CPO, it's Bursa Malaysia. These international traded agri commodities, the timing is 9 a.m. to 9 p.m. in the late night. Okay. Similarly, we have on NCDX, the domestic agri commodities which are traded, where the timing is 9 o'clock to 5 o'clock. So when it comes to cotton, the lot size is 25 bales. And when it comes to CPO, it's 10 metric tons is what is the lot size which is traded. Let me move on to indices. Now, like you have Nifty, Bank Nifty, a year back, MCX has launched indices. Currently, there are 3 indices which are being traded. One is Bullion Index, then you have metal index, then energy index. Okay, bullion index is nothing but it's a composition of gold and silver, and this composition keeps changing every year in the month of January, but it is January contract, but it's announced well in advance in the month of October. Currently, 66.6% is gold and 33.4% is silver. So basically, instead of indices solves one of the biggest challenge that a single commodity trader has, because all his margins are put in one commodity. His with indices, his risk is diversified because he's not taking position in one commodity. And as I said, all other commodities are compulsory delivery. It moves into staggered delivery. But when it comes to indices, they're all cash settled contracts. So they expire at the end of the month. These are the advantages. And compared to the margins, what is required on a single commodity, in case you want to trade gold or silver, the margin requirement is higher. But when you trade combined as a bullion index, the margin requirement is lesser because risk is also lesser. So indices are a fantastic product and it's been gaining traction. So you have bullion index, you have metal index, which is a composition of 5 base metals, and you have energy index, which has recently been launched. In energy index, 75% is crude oil and 25% is natural gas. So great tools for portfolio diversification, very easy to trade, right? Real-time prices are disseminated, and all those traders can avoid that single commodity risk with this, and they're all cash settled. So these are the advantages of commodity indices. Let me just get into the contract size. Bullion index and metal index, the trading unit is 50. And 1 rupee movement will give you gain or loss of 50 rupees. But when it comes to energy index, the unit is 125. 1 unit will give you a gain or loss of 1 rupee, 125 rupees. Moving ahead, let me just quickly dwell upon what is the cost of trading at ICICI Securities. We at ICICI Securities, across all the customers, all the plans, we have only one brokerage which is applicable for anybody who trades into commodities, and that is rupees 20 per executed order. It can be a 1 kg gold where the contract value is 48 lakh, right? You buy 48 lakh, you sell 48 lakh, it's 20 rupees plus 20 rupees. Even if it's a small contract, it's 20 rupees. So what I mean to highlight is it's only one brokerage, one plan which is there at ISEC. Other costs in commodities apart from brokerage is the Commodities Transaction Tax, which is 0.01% or 1,000 rupees on the sell side. Then there's a SEBI fee. Then there's a stamp duty which is there. Then exchange transaction charges and applicable GST. So the brokerage is very, very minimal. So one can enter, exit in commodities. As I said, they're also pretty liquid. So this is all the presentation from my side. I think we have Mr. Somesh Vaidya, who has joined from MCX. Somesh, thanks for joining us. And especially in this Investors Awareness Week, we are obliged, thank you for joining in this webinar today morning, and request you to run through the presentation for all the investors on commodities, and also please highlight on do's and don'ts, what they should look at before trading into commodities. Over to you, Somesh.
Thank you so much, sir, and thanks for this opportunity. As everyone can see in the background, it's investing through knowledge, a way to financial independence. So which means that it is our prerogative to guide, be a philosopher or a guide or a coach to take you through what commodities are. You can tell it as 17-year young market or just 17 years old. And with age, you get that kind of independence. But it's our role to guide you all to a better informed investment and trading decisions. So I'll take you through a short presentation from my side. What is the role of the exchange? What products are being traded? And you as an investor, what things you need to take care of so that you make an informed decision. Sir, if you can just remove this ISEC presentation so that I can start mine.
Sure, Somesh. You can share.
Thank you so much, sir. Can you see this slide?
Yes, it's visible.
Okay, thank you so much, sir. So when we talk about financial markets, broadly, we understand capital market very easily. Share bazaar, jisko hum bolte hain, where people come, they put in money either in a cash market or the derivative market. And basically, it's a market for capital appreciation. You put in money in shares of or companies which are listed on the platform, expecting the price of your investment to increase or company to pay handsome dividends to you, and that's how you make money on your investment. So you can invest directly or through mutual fund route or various other routes. So capital market is a very easily relatable investment avenue. Then when we talk about debt market, it's basically market for interest rates. And this market, basically it's it's kind of linked to other markets as well, because any change in the interest rate has an impact both on the capital markets as well as the commodities market and the forex market. When we talk about forex market, it's the most liquid market across the world. The US dollar being the leading pack in the currency derivatives or currency market, because it's the common currency for trades across countries. We have money market, which decides what's the available liquidity in the market, how easy the liquidity is based on the interest rate. And then something we have is commodity market. Now, when we try to analyze or decipher how commodities market are related to each of these markets, when we dig deep, we understand that each and every market is somewhere or the other related to commodities market. Take an example of forex market. Any change in interest rates, any change in the forex rate, US dollar becoming 76 for current from 74 or 72 per dollar from 74, it has a direct impact on commodities. How? 80 or 85% of the commodities, internationally linked commodities, is imported by India. Crude oil, gold and silver, metals are imported. Even to some extent, we import agri commodities also, right? So any change in forex rates, if the price of dollar increases from 74 to 76, which means you have to pay rupees 2 per dollar extra for every single bit of commodity that's being imported, which eventually leads to price of commodity getting costlier, right? Debt market, very sensitive to interest rates. Any change in the interest rate has got an inverse correlation with commodities market, because your appetite or cost to purchase a commodity reduces with increase in the interest rate. So when the appetite reduces, there is less of demand, supply remaining constant, prices may go on the downside. You have commodities, a market which gives you signal of what's happening in the economy. Price of commodities, for example, base metals in last 1.5 years, the prices of base metals have increased tremendously, and you could see that all the equity companies in the capital market, the price of which are related to base metals, all the share prices of those companies have increased, right? So commodities market basically, and money market, basically liquidity, kitna free flow available hai market mein for an investor put in money either in the currency or the commodity or the capital market, right? So these markets are interlinked to each other, but commodities market per se, since it is related to the economy, which drives the price of commodities in the market, which drives the inflationary aspect of the country, is all derived from the commodities market. So for an investor, it is very important to know what are commodities, what are commodity markets, what are commodity derivatives market, and how I can get clues from this market so that I can make informed decision in commodities as well as the other markets. So I always tell investors that there are 4 platforms or pillars of any market. First of all, it's the availability of an online platform, the digital platform. Sir already covered that the commodities market trade from 9 a.m. to 11:55 or 11:30 p.m. in the night. And why extended hours? Why extended hours when equity markets stop at 3:30 in the afternoon? Why do we need commodities to trade till 11:55? For a simple reason, as I said in my opening statement, 80 to 85% of the commodities traded on Indian exchanges are imported. Crude oil, natural gas, base metals, gold and silver in the bullion segment are all imported commodities. So to have an arm's length price or arm's length a replica of international prices, because India is a price taker for all these imported commodities, since we do not have our own production capacity, we have to refer to international markets. So to have the prices in India aligned to international markets, since international market trades for an extended hours, our markets are also open till 11:55 p.m. After I give you a platform, you need products to trade or products to invest. So we have futures, we have options, and then we have indices also, or index futures also. So we trade contracts of underlying commodities, futures contracts in bullion, in base metals, in energy, in agricultural also. Then we have options on futures and another derivative itself of a futures product, wherein it gives an investor a low cost mode of participating in or trading in commodities. And then we have index futures, which is a way to a portfolio way of approaching to a particular sector. For example, Bulldex, it represents gold and silver contracts put together. So if any participant want to take a view of the bullion segment, whether the price of gold is going to increase or decrease, instead of having a direct exposure to underlying commodity, they can have an exposure to index. Metal index comprises of 5 base metals, again a view to a particular sector. An energy index comprising of energy, crude oil and natural gas, again a view of the energy sector. Now, as you see, each and every commodity has its own fundamental. Yesterday, sir gave an example, crude oil has a high volatility. The prices fell by 11.5%. On the flip side, the natural gas was up by 4.5%, which means both these commodities trade inversely based on demand and supply on fundamentals. Gold, silver was down by 1,000 rupees yesterday, but gold was up by 500, 600 rupees yesterday, right? Again, inverse correlation. So each and every commodity has its own fundamental, and they trade on their own dynamics. And that's why I say commodities become a very important role. They play a very important role in any investor's portfolio, for them to understand how I can diversify my existing investment into commodities because they behave differently. Then we have participants, be like day traders or hedgers or arbitragers or farmer producing organizations for agri-commodities. And then most important are the policy front, which is the regulator, which comes out with a lot of policy for development of this commodities market. Like from 2003 to 2016, we had Forwards Market Commission as the regulator. Then we have SEBI as the regulator from 2016. Gradually, they allowed first options on futures in commodities. Then they allowed indexes. Then they allowed participants like mutual funds and AIF and PMS. And hopefully you will see more new participants and products in this market to make the market more liquid, so that the actual users of commodities, the hedgers, can take informed hedging positions. So these are the 4 bases or 4 pillars of a market. Most important, what affects the price of the commodity? So international markets, what's happening there? What are the news? What are the dynamics of that commodity in the international market? It has an impact on the commodities. So crude oil, why did it fell yesterday? Because of some reasons that, again, we have an issue of variant of coronavirus, which may impact. People are talking about re-lockdowns in international markets and so on and so forth. Probably there could be a less demand for crude oil or more supply of crude oil by OPEC plus and so on and so forth. So as a result of which, there is an impact on crude oil prices. Number 1. Number 2, Forex rate, any changes in US dollar has an impact on commodities because the commodities are being imported. Geopolitical factors, very important globally as well as Indian market. Any impact on policy decisions by the governments has an impact on the commodity prices. Do we have any trade policies and regulations, any tariffs or tax structures which restricts a price increase in a commodity? Because ultimately increase in price relates to increase in inflation, and that's where the problem comes when it relates to the agri commodities, right? Economic factors of a country, very important. We knew that when the first lockdown was there was no consumption, but eventually when people started to move out, the lockdown was opened, people started consuming commodities, and that's where the market started to behave normally, right? So very important role commodities play that in the market, in the economic conditions. where we need to understand that how demand and supply, how the economic conditions are there in the market, which plays an important role. Other set of informations like the employment data, the housing data, or the interest rate data, or unemployment data from the economies, especially in the US, also plays a major role, because those data impacts the currency of a commodity, a currency of that country, and any impact or change in the currency has an impact on commodities, right? In India, there are stock specific or commodity specific events or statistics like demand supply scenario. For example, in agri commodities, especially whether we had a good monsoon, whether the sowing was good, whether there is a good demand for a commodity, supply is high or supply is low, decides the price of a commodity. Take an example of cotton, where we had incessant rains in the cotton growing regions late during the harvesting time, as a result of which the cotton prices shot up from 18,000 per bale to 32,000 per bale, expecting a crop damage. Demand being the same, with expected restriction in supply, the prices shot up. The price of crude palm oil, which is being 100% imported by India, and again reliant upon the international market like Bursa Malaysia, any impact or any change in supply side from those Indonesian countries has an impact on crude oil price, crude palm oil price in India, right? So these are the commodity specific events or data points which impacts the price of commodity as well. And then we have seasonality, structure, and other events like marriages. Typically, whenever we have any events in India like marriages, people straight away go buying gold. So you would have seen in the news that during the time of Dhanteras, 15 tons of gold was bought by investors, right? So that's the kind of likage or love for gold in India. That's why India becomes the second largest consuming country of gold. These events also impact the prices. The prices of the gold was stable around 46,000 per gram, per 10 gram. And that's where people went buying gold. So these are the demand side scenarios which impact the price of the commodity as well. So these are 5 to 6 important points which you need to take care of while looking into commodities trading. So these are broadly the 4 segments where the commodities are traded: bullion, energy, metals, and agri commodities. The regulator SEBI has notified 91 commodities where derivative contracts can be launched. Pretty soon, exchange is also working on electricity derivatives and another new product in the energy segment. We all know we consume electricity. The only thing we know is we get a bill on a monthly basis. We just see the amount and we make a payment of that. But we don't know what is the price per unit. How are the demand supply scenarios of electricity in India? So hopefully in the near future, you will have electricity derivatives also. So new innovative products are also being launched in the commodities side. When we talk about the volumes at the exchange, gold, silver contribute around 56% of the total volumes, and crude oil and natural gas are roughly 24 to 23%. So roughly 80% of the exchange volumes are contributed by bullion and energy products. So not repeating the slide, but why do you need to trade in commodities? It's about leverage. We trade derivative contracts. You're not trading a spot or a physical contract where you need to make out 100% capital outlay, but you need to pay margins to trade commodities. Second is the liquidity aspect, wherein you have contracts, the front month contracts, which are the most liquid. You have an easy entry and exit with lowest impact cost. You need to diversify. Now, this is where importance of commodities come in. Take example of yesterday. If you are tracking equities on a daily basis, the index was down by 1,200 points, but gold was up by 600 points. Exactly yesterday. But if I see a 5-year data, you would see the yellow line as Nifty and blue line as gold. Whenever Nifty is performing, the gold is underperforming, and it's vice versa. So which proves that gold acts as a portfolio diversifier. Nobody can predict markets. Nobody can predict the future. But if you have a diversification in some product like gold, I'm sure your portfolio would give you a better risk-adjusted returns as compared to putting all your money into one asset class, right? Just a minute, please. I'm so sorry. Gold is a portfolio diversifier. This is the leverage in commodities that we were talking about, wherein you pay margin money to take one position in a contract. Jitendra, can you hear me? There seems to be some network issue.
No, your voice is perfect.
Okay. I'm so sorry. Just allow me a minute, please, if you don't mind.
Yeah.
Yeah, because there is some flickering at my end. Allow me a minute, please.
Yeah, your presentation is also visible properly.
Okay. 1 minute,
You can
please.
continue. Yeah.
Sorry for this. Yeah. So when we talk about leverage, we talk about paying margins for trading in commodities. Like sir explained in previous presentation that we have a smallest contract for gold, which is a gold petal. You trade 1 gram. The margin requirements are roughly 440 or 450 rupees. But you as an investor have a risk appetite much more than that, right? So you have other products like gold guinea, which is an 8 gram contract, gold mini, which is a 100 gram contract, gold 1 kg, which is a 1 kg contract. The margin requirements are the highest, right? Similarly, we have silver micro, silver mini, and silver, 3 different variants of silver available for trading. But if I need to take a view of a segment, which is the bullion segment, I have a Bulldex contract, which comprises of 66% of gold and 34% of silver. The contract size is 50 units. The margin requirements are roughly 42,000 to 43,000 rupees. So as a portfolio diversification aspect, you can trade gold and silver both put together through one single contract, which is the index contract, that is Bulldex. Similarly, for natural gas and crude oil, which are individually both volatile products, but if you want to trade both the segments or both the contracts put together, you have energy index having 125 units as the lot size, with margin requirements of around 86,000 rupees. You have individual 5 base metal contracts, margin requirements roughly 1 lakh to 3 lakh, 3.5 lakh rupee. But again, we have a metals index, which represents the 5 base metal contracts, and the margin requirements are roughly 60,000 rupees. So you can see that still in commodities, you can take a view for individual sector, which is the bullion segment, the energy segment, and the base metal segment by investing in the index product. And then we have agri commodities. These two are the most liquid agri commodities, cotton and CPO, which are again a very good products to trade because these are the local price discovered contract, and based on the demand supply of these agri commodities, the prices are being derived. So bullion contracts, I'm not repeating because this has been covered by Mr. Ramesh in his previous slide, but these are the 4 gold contracts and 3 silver contracts available for trading. For base metals, we have 5 base metals with individual trading and delivery sizes. Monthly contracts are available in base metals. Energy segment, these 2 are the cash settled contracts based on the NYMEX segment of CME, basis which the prices are being derived. And in agri contracts, as I said, cotton and CPO are the most liquid contracts, but we have menthol, kapas, and rubber also available for trading. Now we have spot prices, most important. As I said, that commodity derivatives derive the prices from the local spot market. And to know for an investor what are the spot market prices and changes in the spot market, we as an exchange disseminate the spot prices of commodities twice during the day, one around 12 p.m. another around 5 p.m. and the investors can take clue what's happening in spot market for the commodities. So after the futures contract, something what we have is options on futures, and another derivative of futures, and another product for investors to trade. Not much detail about options right now because we need to still understand the futures aspect of the commodities first and then the options. But F and O is most commonly used term in the financial market. So O stands for options. Basically, it works like an insurance for a buyer, wherein the counterparty risk is managed by paying a small charge, which is known as premium. And that is why it is called as a low transaction cost and low capital intensive product. So something known as call option and put option for the buyer as well as the seller. So we have 5 option contracts available for trading, or rather 6 actually: gold 1 kg. Then we have got silver 30 kg and silver 5 kg option contracts. We have crude oil, which is the most liquid contract. We have copper, we have zinc. This December, we'll be launching options on nickel, and in somewhere in the month of January, you will have options on natural gas contracts also available for trading. Then the index futures, we spoke a lot about it. Basically, we have Bulldex and Metaldex as 2 products having gold, silver, and the 5 base metals, but the trading units is the 50 units as a trading lot size. The contract value is roughly 8.5 lakh rupee. The margin requirements are on the lower side as compared to individual products. In the energy index, we have crude oil and natural gas with margin requirements lower as compared to individual products. These indices are cash settled, available for trading on a daily basis from 9 a.m. to 11:55, except on the expiry day where it expires at 5 p.m. In the evening. And as a representation of a commodity that is via an index, which is Bulldex, Metaldex, Energy Dex versus Nifty, you could see that Bulldex, gold and silver against the orange line, the blue line versus the orange line, inverse correlation, because the gold and silver both as a product, especially gold, moves inverse to the equity market, and that's where we see whenever the equity market is rising or falling, it has got an inverse correlation with bullion index. So is metals index, so is the energy index, and even individually, all 3 indexes are not directly correlated to each other. Each of the commodity indices has got its own different fundamentals at play. So this slide basically tells you how commodities behave differently to the equity market. And that's where we talk about portfolio diversification, why you need to have commodities as small bit of investment in your overall investment portfolio, which is going to help you diversify it, manage your returns efficiently. Most important, as we are celebrating the World Investor Week, as an investor, what you need to do and what you do not need to do. So let's do the don'ts first. Don't go by tips. Basically, do your homework, study it. A lot of information is available on ICICI's website, on the exchange's website. Check your KYC properly, and always trade through a registered broker. That's what we always tell. Understand the risk disclosure statements. Understand as an investor what are your rights and obligations, or what are your UCCs, what are the margin requirements, and what's happening in commodities. Study that. A lot of information is available on our website, on ICICI's website, on the YouTube channels. That's how you are going to gain knowledge about commodities, which is going to help you make informed trading decisions, right? So this was a very short and sweet presentation, I would say, from my side about commodities. I would request Jitendra ji to take it forward.
Thank you so much. Thank you very much.
Thank you, sir.
So good morning all. I will take next 10 minutes and I will show you how to trade on ICICI Direct platform, the trading related, product related information, where it is available. So I'm sharing my screen. Just yeah. Hope my screen is visible.
Yes, Jiten, it's visible.
Yeah.
Login.
It's ICICIdirect.com, correct?
Yes.
Yeah. Okay. Okay. So once again, good morning, everyone. This is ICICIdirect.com website. If you go to the ICICIdirect.com, this is the home page. Now on this page, you will get various products like equity. Click on commodity. live market related information about commodity. So I have clicked on commodity page and I will get which are the top traded commodities, which are the trading day, and all this information would be issue with my internet. Yeah, I think it's visible now. Okay, so you can see the gold mini live price, it's low, high, everything. Below that, we have the commodity brokerage calculator where we can compute the cost of particular trade before entering into that trade. So just like here, example of gold, if I purchase at 47,640, that this is the live price, and I'm selling at 0.5% profit, what would be my cost, what would be my brokerage, other charges? So total charges would be 925 rupees, and within 9 rupees, 10 rupees, I will be in a break even position and I will earn 22,000 rupees, 23,000 rupees if I sales in a 0.5% profit. So this way I can I can compute the profit and loss and cost and the break even for all the traded commodities on MCX. Now below that, we have the market statistics like which are the top gainer, loser, active value, active volume. So this all information is available here. Again, beside that, we have the product page where on product page, I can see all other information like what is commodity derivatives, which are the commodities are traded. Then we have the various videos, podcast on commodity derivatives. We also have the FAQs at the bottom of the page. So you can see on this page, I'm coming to the research report part where you have the monthly report, weekly report, daily report. These are the research reports available for you. When if you are a new for a commodity trading, just go through this report, get the research view about the commodities, and then you can start. We have the articles, videos, various videos on product, indices, how to trade. All these videos are available here. Now below that we have podcast and FAQ section. Now the question comes, if I want to start with the ICICI Direct, on which platform I can trade? So you can trade through ICICI Direct website. You can trade to ICICI Direct mobile app also. So if I want to start with ICICI Direct mobile or website, how I can do that? How I can activate my commodity account? So here is the login button. Once you click on the login and enter your credential, if you have the existing account, if you don't have account, you can open account from this link and you can start commodity trading. If you have your existing account, just enter your credential and then you will go to commodity page. Once you go to the commodity page, you will get the terms and condition page. If you are a new and you want to start commodity, if you are visited commodity page first time, you will get terms and condition page. You need to just read and accept that. After accepting that, you will get one more page called as a mandatory communication detail page where list of commodities will be there. You need to give the preference, means preferences by default there the selection is others, just like you can see here. Others means you are not falling in a farmer or FPO, value chain participant or proprietary trader category. Value chain participants means if you are an exporter, importer or wholesaler of that particular commodity, then you can select value chain participant. But we know most of you would be falling in retail trader category, so you need to select others. So at the bottom of the page there is an update button. You just need to click on update and then you will get this message that within a one working day your account will get activated in commodity. Next day or by the end of the day you will get a message or a mail saying that your commodity account has been activated, you can start trading now. So after that you can start trading. Now question come, how to start trading? And one more thing, there is the few question that what is the charges or what is the fees for opening or activating commodity account in ICICI Direct. So if you have the ICICI Direct trading account, to open commodity account, it is completely free. We don't charge anything extra for opening commodity account. So it is completely free. Now question come, how to start trading in commodity? So I am showing through the brief presentation. This is the commodity home page where you can see all the information about commodities. You have the menus like portfolio, place order, allocate fund and all these things. So and apart from that, you can come down and here you can see the trading recommendation. Means we have the complete research support. You can get the live intraday recommendation through IT to gain. You have the monthly commodity derivative reports through this PDF. Below that also you will get a weekly report and other information. Now, if you want to start trading in commodity, how you can do that? So first of all, you need to allocate fund. So in next screen, you can see you need to just allocate fund. I have allocated 1,000 rupees here. After allocating fund, you have another option that my favorite. You can keep, you can save your favorite or frequently traded contracts in my favorite book, which will help you to execute your order faster. Means here I can see the Bulldex, crude oil, gold. These are my three favorite contracts. If I want to buy it or sell it, I can click on buy or sell button, and I don't need to select the contract, and I can quickly place my order. But suppose you are new and you want to start from beginning, you want to start or place order through this place order button, then in underline call field, you need to enter the contract name. Contract name means just like earlier presentation, Ramesh sir and Somesh has explained, these are the 16, 17 contracts are available for trading. Like gold petal is the smallest contract. And I say ICICI direct code for gold petal is gold. I can select the contract, just like 2-month, 3-month contract would be available for trading. Then after that, you need to enter quantity. Quantity can be entered in the multiple lots or also in the quantity. I have entered the one quantity. Then I can see the price at right hand side, 4835 is the price going. I can put my price. I have entered a 4800 and I need to click on buy. After click on buy, I will get the verification page where all the order placement detail will be there for verification. When I will click on the proceed or confirm, then my order will hit to the exchange and I will get message that your order has been sent to the exchange. Now after placing order, where I can see my order, where I can track my orders position, so it will be available in order book. In order book, I can see all my orders which are executed or order, just like I have placed this 4,800 rupees order. So it is in order status because the price was higher than that. So in case I have canceled any order or any other executed order there, it will show in order book. But I want to check my executed order, then executed order will be available in trade book. Here you can see that there are two orders placed on 20th May. These are executed. This is price. This is the brokerage and taxes. Brokerage taxes can be seen at the end of the day, after end of the day settlement process. That information is also available on trade book. Now question come, if I have any position, means I have purchased gold petal at 4,800. It has executed. Where I can see the profit and loss, from which page I can square up the this position. Where I can track my margin. So this is all available on open position page. This is open position link where I can see my open position. Open position means I have taken the position in commodity. I have taken the buy or sell position in commodity, but I have not squared up. Why I'm saying buy or sell? This is the derivative market. If you are bullish, if you feel that the prices of that commodity will go higher, so then you can first buy and then sell it later. If you are feeling that that commodity price may go down, just like yesterday crude oil was down by 10 to 12%. So in that scenario, you can first sell it, and then when the prices come down, you can buy it. So by this closing the position is called as square up. So the square up button is also available under this commodity open position page. And there is the minimum margin and available margin column. You need to track that for your risk management purpose. In case because of loss or increase in margin, that margin is insufficient, then system may square up your position. So you need to keep the extra margin allocation in allocate fund page. So that is very important. We get many query. My position got squared up automatically. Why? Because there might be two reasons. One is that your position is loss, whatever notional loss is there, that will be deducted from your provided margin, or there might be some sudden increase in margin by exchange. So because of these two reasons, position may get squared up. So you need to keep extra margin in commodity allocation phase. Now, after that, if I want to check my profit and loss, where I can check that, it is available on portfolio page. Under portfolio page, you can see you can check your profit and loss of position from day wise. And that range depends on the expiry date of contract. You can select, just like I have selected May 2022, May 2022. So I can take the profit and loss of all my contract. Whatever the position has been closed, the profit and loss will be visible in realized column. If any position is open there, then the open position open position profit and loss will come in unrealized column, and the total of both will come in total column. So this way we can track our profit and loss. All this information available on the website also. Means there are profit and loss statements. You can download the profit and loss and transaction statement from ICICI Direct website commodity page that is available after 3:30 p.m. on weekdays, means trading days, and other information just like research report, then presentation on how to trade, videos on how to trade is all available on ICICI Direct website. So this is all from my side. Thank you very much. We can take the Q&As between.
Yeah, Jiten, in case quickly, you can also zip through the new future of Watchlist, which I'm sure many of the investors would be interested. And I believe that's a good value.
Yeah, just a second. Give me a moment. I am logging to the ICICI Direct website. So recently, as Ramesh sir said, recently we have launched Watchlist futures for commodity. When you enter into the commodity page, this is the commodity landing page. The first option is Watchlist. You can see here the new blinking. So when I click on the new, I can get my watch list. This watch list can be common, equity, F&O, currency, commodity, all can be in same watch list. Or if I want to prepare my separate watch list for commodity, I can do that. This is the equity watch list. Here I have prepared my watch list for commodity in watch list 2. So I have added commodity contract. You can see here gold, silver, crude oil, energy index, copper, all these commodity contracts are available. Here the LTP, here is the percentage. In case I want to get the all other details, just like what is bid, ask, all these details would be available right now. Because we are in Saturday and market is closed, this price is not flickering, but in trading day, in live market, these prices will automatically will change. It will be streaming. You will get a live market information, live market feeds. If you want to get the if you want to check the charts of that particular contract, you can just go to the any contract and just click on this chart button. You will get a right hand side chart. So there are multiple functions and indicators or types of charts available for studies. You can use this from this page. And one more important thing, you can directly trade, means directly buy or sell from this page, this chart page, or this watch list page. There is a buy or sell button. You can click on buy and you can purchase or sell your position. Again, on chart page there is a trade link. You can click on trade and you will get a buy and sell. You can enter the quantity, price, and you can enter your order.
Great. Thank you. Thank you, Somesh, for that lucid presentation. Thank you, Jiten, for explaining how to trade in commodities. Dear viewers, as you all know, as per Simon Sinek Golden Circle, it's always important to start with why. So that's how we covered why one should trade in commodities, where we discussed about portfolio diversification. We said that one shouldn't ignore commodities, right? Then we also understood how to trade in commodities from Jitendra, a very crisp presentation with all the features that he has covered. And Somesh also covered what are all the commodities that had to be traded. He talked about the volumes, he talked about the open interest, he talked about the price movement for each tick. So I believe all our viewers have got enriched or have understood basics on the how to trade commodities. And I hope that today's session, I know we are exactly, it's an hour, it's 12 noon now, it's been an hour. I hope all the viewers have got enriched with the basics of how to trade on commodities. So this was a part of the Investors Awareness Week that is being celebrated across. So I thank Somesh for joining. I thank Jiten for this presentation. Thank you all the viewers for joining, taking off time on this Saturday. Thank you very much. Yeah.
Thank you so much, sir. And we hope to continue this series of education apart from the World Investor Week, but for other investors to come in and take the benefit of the commodity price movements. Thank you so much for this opportunity.
Sure, Somesh. Thank you. Thank you. Thank you, one and all.
Thank you.
Thank you all. Thank you very much.